What's up, guys? Welcome back to the channel. Been a little while, but I've been busy working on the course, but I plan on making a lot more videos here for you guys. So if you're not already subscribed, please subscribe. I really appreciate it. This video is for subscribers to my Telegram group. Thank you guys very much for the support. It really is appreciated, okay? If you're not already a Telegram subscriber, no worries. You should still gain some knowledge from the video, okay? For those of you who are, as a bonus on top of my technical analysis on Telegram, I'll be releasing 1 or 2 altcoin charts per month with all my TA on it that you can then import to your own TradingView and then set alerts and be able to take some very juicy trades. All right, guys? By the way, shout out to Jason Casper for having me on his channel. His community's been great. I really appreciate the love, guys. I'm currently using Jay's crypto fusion bot to enter trades, and I just have to say, pretty amazing when you already have your levels set and are able to just take trades when your confirmations are met. Okay, if you're not already in there, guys, get on it. I believe the bot is still in beta testing, but I'm pretty sure the price is going up when the bot goes live. If you're part of his VIP Discord already, I would recommend taking advantage of the current price. So don't sleep on it, guys. All right. Yeah. Let's go ahead and get started here. Okay. So here we're on my Patreon, guys. This is where you can sign up for my Telegram channel. So as I said, I'll be posting monthly charts for you guys that you could then import to TradingView. Okay. So you click the link, and these are going to be available on my Telegram as well, so I'll post them on both platforms. So when you open the link, this is what's going to come up. All right. So what you want to do is you want to click, because right now this chart is in view only mode. Okay, you can't really do anything to it. You can't. There's no drawing tools here. You can't do anything. So what you want to do is you want to click copy. It's going to ask you to make a copy. Click save, and that's going to open another chart. Okay, here, this is on your own account. You can start making trend lines or whatever you want. So what you want to do is click this down arrow here and click on your object tree, the square stack right here. So here, what you can actually do is taking it one step further. If you already have your own chart with your own TA on it, for example here, right, what you can do is we're going to go to the 12-hour here so you can see the chart. And what we're going to do is go back to our browser where your new chart layout is saved. And what we're going to do is you're going to click once on each folder. Okay, so you click Command C or Control C on a PC, and you go back to your own chart. What you're going to do is click Command V or right click paste, either or works. And on your own chart, you're also going to open your object tree. What you're going to do now is highlight one, press shift, and click the last one that just got painted on there. Okay, so after that, you're going to right click. You're going to go to create group of drawings, and that's going to create your own folder there. Now you can name this folder whatever you want. So if we go back right to the other one, this is the 6-hour purple. Okay, but it's numbered 1. So what we're going to do is highlight the text, Command C to copy it. Go back to our chart, rename it, right? The reason I name it like this is because these are your main channels here. And it'll make more sense when you actually see what I mean here. You're going to go back. You're going to paste these ones now. You're going to right click, create a group of drawings there. You're going to back, copy the name. Boom. Okay. Now you can grab that, drag it under. Okay. So this eyeball here will either hide the whole folder or show it. Okay. So this one is just a subdivision of this one. Okay. So we're making parallel channels in the middle between the top line and the midline there on each of these channels. And these are right on, guys. I made sure. So it looks a little crazy on these higher time frames, but you'll see what I mean in a few minutes here. Okay. So we just go back and repeat the same process. Command C on the whole folder. Go back. Command V. Create a group of drawings. We're going to name that one right. Command C. Command V. You could actually just use the one that you just created to name your other one. Just make sure you change the number. Okay, these are going to be your primary channels with the 1 in the front, and these are going to be your secondary channels with the 2 in the front. Okay, so just to let you guys know, the primary channels will be stronger supports and resistances. The secondary channels will be weaker, but still very strong. Okay, these are higher time frames. So yeah, without further ado, so if we drop down to the 15-minute, you'll see what I mean here. All right, so yesterday we bottomed out on these 2 channels. Like I was saying in Jason's video that I did with him, when you hit one of these double supports here, you're at least going to catch a bounce from there. Okay, doesn't mean you're just going to go to the moon, but you're definitely going to catch a bounce. Okay, but right, you want confirmations. You don't want to just, because this could have easily, this could have easily came down there. But if I just go back a little bit, guys, you guys can see how accurate these charts are. Okay, we crashed straight from this channel, use this channel as support, crash down straight to the so this purple line right here is the midline of this channel. Okay, this purple dotted line. Let me turn off the moving averages so you guys can see it a little bit better. Right, so this purple dotted line is the midline between this, and then this thinner purple line is the midline between your midline and your top line. Okay, so these are going to be a little weaker, and these are going to be a little weaker. Okay, but once you're hitting these thicker purple lines here, you're going to start seeing pumps right from them right to the top right of the channel here. So the way you find trades, guys, go back to where we were. What you want to see, if you're using my strategy with the moving averages, by the way, you guys have access to this indicator here if you sign up to my Patreon. So what you want to see when you're taking a long, right, is this, right? So you see this gap between all these moving averages here. There's a gap between the price and the 600, and it's pretty big. So that price doesn't like to be away from it so long. Okay, so see here, it gets away, comes back, gets away, comes back. Right, so your pink 600 is your anchor. Okay, you're using all these other EMAs for confirmation. Okay, but let's just focus on these channels here so that you guys can see how to enter trades. Okay, so when you start seeing these moving averages getting real far from each other like this, there's gaps between each of them, right? So this is a 350, this is a 200, there's a fat gap. There's a fat gap between the yellow and the red, the blue and the yellow. So when you start seeing that and you start coming down to a support level, right? Then you want to open up. If you use if you have Market Cipher, then great. Market Cipher is a great indicator. I use it all the time. It's one of the best indicators out there. But if you don't have Market Cipher, then these charts for Telegram subscribers will come with the RSI with both EMAs here, okay? All in one. So what you want to start seeing, guys, is, like we said, a big gap, right, between all of the EMAs here. You want to start seeing, if you zoom in there, sorry about that, guys. You zoom in there, you want to start seeing bullish divergence on Market Cipher or on your RSI, okay? They both printed it. So you see how this these two trend lines held up perfectly, okay? But you definitely want to see bullish divergence on the 15-minute and the 1 hour, okay? So if we go back to where we were, you see that we have a pretty exaggerated bullish div forming on Market Cipher and also on the other side. Okay. So this is what you want to see on higher time frames. I mean, if you're day trading, this is a higher time frame, in my opinion. But that's what you want to start seeing. I would get in on the retest, guys. I always stress to get wait for retests. These trend lines will most of the time get retested, okay, on entries. So we hit here. Oh, okay. Another thing, guys, okay? You see how these folders are named 1 and 2? We already went over what that means. These are primary, secondary, but then it'll have the time frame that the channels were actually created on, okay? So if you just go and I do 6 hours for now. If you go to the 12 hour, right? Because that's where these channels were created. Okay. For example, here, okay? On this entry, when you see this 12 hour here, right? Close above this channel. That means this channel is going to hold that support, okay? And doesn't mean to just willy-nilly buy. You want confirmations that we just talked about on lower time frames with bullish divergences from 15-minute up to the 1 hour, okay? And that's just the rule of thumb. You could, if you're actually scalping, like 1 minute, you'll find all kinds of entries with these charts here. But let's just say you're day trading, you want some pretty nice gains there. You want to see the 12-hour close above, okay? So here, same thing. We broke down, closed the 12-hour above. You already knew this was going to be support, okay? Also, guys, on the 12-hour, our 200 EMA is above our 200 SMA. And the 200 is above the 350 here. Disregard this 350 SMA that's above. These take longer to play out because it's on such a high time frame. What you want to see on these high time frames is where the next EMA, which would be your 200, is relative to your highest EMA, which is your 350. Okay, and they're still very far apart. It would take something very drastic to change that. So when you see yourself coming down here, this is serving as support here. The 200 EMA above the 200 SMA. You're closing the 12-hour above your channel. Then you're retesting the channel. And this is exactly what we see on the 15-minute, but that's just another way to look for confirmations, guys. So you see the 12-hour close here, the next 12-hour candle, retested, and boom, it took off, right? So like, so we're looking at a 10% move, about a 9% move if you got out at the next trend line, at the next channel midline, actually. So usually on these lower time frames, as you can see, we pumped up, crashed from this this midline here. That's actually the weaker midline between this actual midline of your primary channel and the bottom line of that same channel. Okay, so that's the midline between these two. So you can see we came up, crashed down. So you could have took this trade on its own. This is more of a scalp. That's like a 5% move in 7 hours. All right, guys. But I usually stay in. I like to stay in a little bit longer. You know, this took about a day or two. So these are all confirmations, right? We had confirmations that we're going to crash down here. Why? Because there's your 600 SMA is above your 600 EMA, and you're hitting a major midline here. Okay, so we crashed down. Where did we crash to? Exactly the midline between those two midlines, right? We pumped up again. So you can trade these level to level, guys. I do it all the time. And you also had confirmation here. You had a bearish div here. Bearish div on Market Cipher as well. So this is how you can start looking, guys, for your confirmations. Now, if you're using a bot to enter trade, I recommend using Jay's bot, like I said, because you can set confirmations with different indicators, okay? So they have the bearish momentum, right? So you would set your bot to either to enter a short, let's say at this this line right here, okay? So with altcoins, guys, this is another thing, okay? With altcoins, when I'm trading Bitcoin, you can have your stop loss, you know, at about 1%. With altcoins, you can't do that. Altcoins are a lot more volatile, so it can wick up or down very fast. Okay, so what I'm saying is your stop loss has to be higher. I would say about 2 to 3%, more like 3% to be honest. Stop loss, and if you're getting liquidated, if you can't afford that, right, and you're getting liquidated with 3%, you're putting way too much on the trade, guys. You shouldn't be getting liquidated with 3%. These are very high probability trades, but you cannot. You're gonna lose more money getting wicked out, getting stopped out, than if you just stay in the trade and trust your technical analysis. Okay, because if you're getting stopped out 1%, 1%, 1%, it starts chipping away at your account. Okay, so again, we're hitting the 600. Is usually going to serve as a resistance, and we're hitting this this trend line here. So I wouldn't just me personally, since the midline is so close to the 600, I would have set my entry at the 600. Okay, when they're this close, most likely you're going to hit it. So, or what you can do is see how here the and this happens all the time, guys. So this is not just one example. This happens all the time. So you can see here. Let's zoom in a bit here. Shit. There you go. Okay. So right here, let's hide these. Yeah, let's hide these EMAs real quick, so you can see it better. Okay. So See how this candle broke right through it, came down, right? This is confirmation that this is resistance here, okay? Because a candle this big should have had no problem getting through it. So it crashing down halfway is showing you resistance here, okay? So you go up. This kind of wicks down. Boom. Right? This is stopping out a lot of people that aren't patient. The market always rewards the patient, okay? So what you want to see is candle close above and then wait for a candle close below. You will retest it. I would say 80 to 90% of the time, you're going to retest it, okay? So on this retest, this is where you enter, okay? Come down. We close the 15-minute right above it. This is support. Boom. Right, and now we're here. But as you can see, guys, this was also support, right? Because first, here, let's get rid of some of these just so it's not so convoluted here. We're going to get rid of the 21, the 11, the 5. We're going to leave the 5 simple moving average. We're going to get rid of the 11, the 21, okay? So all we're leaving on the chart is the 50, the 111, the 200, 350, the 600, okay? Both SMAs and EMAs, okay? So what you want to see is the reason this held as support here. And you would have already known you were going to find support here, over here, okay? So I used to trade this without these channels, all right? Let's turn off these channels. And what usually happens, right, is you get this 50 crossing the 100 here. Then you get your 50 crossing the 200, okay? This is support already. You have the 50 is going to take a while to cross back down. See how here it dropped all the way down. The price dropped all the way down here, but the 50 stayed above the 100, right? So this is support. Also, your thinner red 200 SMA is below, or you can think of it as your 200 EMA being above. See how here it's the opposite. The thinner one is above. The thicker one is below. Here they crossed. Thicker one above. Thinner one below. Okay. When you see this and you're already coming from an uptrend, this is going to hold a support. So I used to just long the SMA. But like I said, these channels are a lot more accurate. Okay. So we came down right to the channel, closed the candle above, boom, took off again. Okay. So this is how you can tell. Okay. So this doesn't mean that it's bullish. Okay. It just means this was going to hold this support. We're still not bullish. Why? Because look at your 350 compared to your 600. Okay. Your 350 is very slow to move. Your 200 as well, but your 350 is very slow to move, and your 600 would be the slowest to move. Okay. Look how the 600 SMA is getting very close here. Okay. But it's still, the EMA is still not above. Okay. So we might get another pullback, right? But now we have more support because the 100 is above now. But we're still not above the 100 or the 200 is not above the 350, and the 350 is very far from the 600. Okay, this is how you can kind of tell your environment, guys. This is why I use so many EMAs, is to get an idea, right? And it goes level to level. Okay, guys. So you're gonna bounce off your level, boom, hit the 100, came down. Use the 50 as support because the 50 is above. Came up to the 200. So we went from the 100, came up to the 200, crash, came up to the 350, didn't really crash. But because we didn't really crash, once we hit the 600, that's where you have a lot of resistance here. Because this held, boom, 600, and it's still very far away from crossing above. So I would have took this short all day. This is a very high probability trade here that you're gonna, and that's not even looking at you know, you want confluence, guys. You always want confluence. So like I said, you got bullish, or you got bearish divergence there, right? You got bearish divergence, and you're hitting the 600 EMA, and you're hitting the midline there. All of these signs are telling you that we're gonna most likely come down. So you take that trade, short, you set your levels, boom. You got a 5% move in 4 hours, guys. I don't know how high you guys set your leverage. I'm pretty conservative with that, but you know, to each their own. What I'm saying is, you know, 5% move on 10x leverage, pretty damn good there. Okay, so in 4 hours, you know, if you put a couple grand on that, you're going to be doing just fine. So that's one of the trades, right? We also said once this closed here, you knew it was going to be at support. You take that trade, it's another 5%. And this is within hours, guys. So this was, you know, whatever, 4 hours, 7 hours. Let's say you didn't get out there. Let's say you got out at the midline again. That's another 5%, 4.5% move, 5 hours. Let's say you got out right when it touched, 3 hours, 5% move. I don't know what to tell you guys. This is, you know, pretty crazy. And we could go and back test, you know, some more, see if any of this is true. So here, guys, for example, we hit the weaker midline, right? But it had already held a support here. So you knew it was going to hold a support. Because why? Look at your 350. Okay, so you see your 350, which is your green. It's staying above your 600, right? And it never crossed. This is what I mean by it is very slow to cross, right? So your 200 crossed down, but your 350 didn't. So now you have support. And where are you going to find support? At one of these channels, right? So if you have support, you're putting in bullish divergences, right? Yeah, bullish divergences here, right? On market cipher. If you go to a higher time frame, let's look for some divergences there. And what do you know, guys? We do have a pretty insane bull div on the 4 hour. This is why you need to use, guys, different time frames, okay? So you want to use your higher time frames for confirmation. I wouldn't use them to enter trades, but that's up to you guys. If you're just spot trading, this is perfect, guys. You know, you buy out your trend line. You have no if you're seeing bullish divergence, you have no risk of getting liquidated. Buy and hold for a couple, you know, a day or two. And let's say you got out at the midline there. That's an 8% move. That's an 8% move in 8 hours. You know? So, like I said, I wouldn't use that to enter trades, but back a bit more. Look at this one here. Sometimes, guys, you will get this, okay? If you get this, you're going to have a stop loss, right? Like I said, you know, a couple percentage points. See, this is what I mean by you need at least a 2 to 3% on altcoins. You want a bigger, you know, you want a bigger buffer. So, you know, 3% would be fair. Like I said, if it's hurting you to lose 3% on leverage, which is a lot, guys, I'm not gonna lie. You're risking too much, okay, on the trade. So with altcoins, I use smaller positions, smaller percentage of my portfolio, and make sure they're high probability trades. So why wouldn't I have taken this trade? We had no bearish divergence, as you can see, okay? So we have a lower low, So we had a lower low and a lower low. Okay. This is not, once it hit this is not an entry. As you can see on the RSI, it also made a lower low. What you want to see is this. But it bounced on nothing here, right? Not really. Look at that. There's your 6 hour, okay? So all of these channels are important, but you have to keep in mind what is what. So your green ones are going to be your 12-hour channels, which are stronger. Your purple ones are going to be your 6-hour channels, which are also very strong, but a little bit weaker than the other ones. But this is why the 12-hour held, 6-hour held. Okay, use the 12 hours resistance here, but as long as you're staying above the 6-hour, boom. Right. So I didn't even have to look to know that we just bounced on something. It's very rare that you either bounce or crash off of nothingness. Right. These channels are very accurate. For example, right, like when you do, for example, here, this crash right here was off the 350, so you're crashing off of something. But here, if you didn't have this channel, you're pumping off of nothing, right? So that's why I create multiple channels, guys, and you will have insane entries, guys. Okay, like I said, your 12-hour, for example, whenever they're this close together, your 12-hour will get hit, but your 12-hour, the 6-hour purple one is confirmation that this is a very strong resistance. You have a double resistance here. So it barely touched the 12-hour. So I would set my entry right at the 12-hour. And the way I do that, guys, I'll set a trend line. I'll make that thinner. Set a trend line there. I'll add an alert on a trend line. And set my bot up on Crypto Fusion Bot's website to enter that trade when that trend line is hit. Okay. And why would I have entered that trade? Again, you look for your confirmations. You have bear div, extreme bear div, right? So this whole bear div, this is your top, this peak right here, and it's way down. And you also have to pay attention to your EMAs on your, so the green and the pink, or the blue and the pink, whatever you want to call it. Whenever your blue, that's your 11 EMA, is below your pink, which is your 21, you will, this is bearish, okay? So you're hitting a major trend line, bearish divergence, EMAs below, boom, you take the trade. Now, this is a risky short, guys, okay? Because you got 3% move there. And whenever they're risky shorts like this, and I'll explain why it was risky, but whenever they are risky, what you want to do is you want to take immediate profit right at your next midline. So wherever that midline is, you take profit. Because why was this a risky trade? You're coming off a massive pump. The 50 crossed above your 600 almost vertically. Your 100 is very, very sloped up, right? So once it comes down, and we'll use the 50 as support. Why? Because the 50, if you zoom out a bit, you can see how sloped it is. When it's very sloped like this, it'll be very hard for price to just fall right through it again, right? Once it starts leveling out like this, see how the 50, which is your blue, is starting to flatten out here. That's when you can start falling more, right? Boom. Got a mean old crash here, right? Because even though this is pointing up again, that doesn't mean anything. You had already started losing momentum here, okay? And if you look on higher time frames, you can just tell by the way these EMAs look. See, when this happens here and the 50 kind of goes down and into, uses the 100 almost as a trampoline, right? Boom. Those pumps are pretty strong, but they're not sustainable. Okay, so like you were going to crash from here regardless. So like once you go up, you put in a bearish divergence. Let's look on higher time frames. You put in your bearish divergence, right? Boom, boom. There, div. Your RSI on the 4 hour, which is very strong, right? Coming up to double resistance here, which is your thinner purple, your thicker green. Midline. Come up, put in bearish divergence, take the trade. Boom, right? Now, like I said, we turn all these off. Because the higher the time frame you're on, guys, these are going to start looking crazy. Like too many lines there, okay? But what I'm talking about here is this is your 600. All your EMAs are still above. So this is why this held to support. Your 600 held to support because all of your EMAs are still above, very high above your 600 there. But as I said in the other example, the beginning of the video, when your EMAs are this far away from each other, they don't like that. Your price is going to come right back down. Boom. Right to your 600, use it as support. Bam. Went up again. You know, the 200 SMA is above. Not great. 200 SMA above again. Resistance. And now we just got another bounce from the 600 because your 600 EMA is above your 600 SMA. So I hope this makes sense, guys. This video already got too long as it is. Again, you know, if you like the content here, sign up for my Telegram channel. Also subscribe to my YouTube, and yeah, I'll see you guys next time.